Hey guys, Stoney here, and I'm going to go over a little breakdown on EU today. We caught a continuation attempt pushing into what I would perceive to be a daily zone. So up here, we are looking at a daily zone that was created a long time ago. So just pulling back on the chart, we're going to go back on the daily and just pull back maybe a couple weeks. So the daily zone that I'm looking at was created back here. So the way I have it set is this break was never truly retested. We got somewhat of a retest here on lower time frames, but overall price never did a full pullback and retest on the daily and then came down. So my idea was this was probably the next level that price was going to stop. Whenever you're trading price that's creating new highs that we really haven't hit in a long time, these were created in April 26, 2018. You have to look left and try to understand price action. When it comes back these levels, it's bound to return. So we also have an order block here, just above it. We obviously didn't reach this yet. I closed the trade long before, but I'm gonna go ahead and set that as an order block now that I'm noticing it. So going back to current price action. Current price action, you can see how it plays out. On the hour, this is when we woke up coming down to London. London Open had a huge bearish run. Or bullish run pushing price up. I was looking for a retracement to take a long away from London. So I didn't wake up until about, I'd say 4:30, 4:45. And when I got up, we started looking for our entries. So the zone that created the potential entry opportunity came from here. As you can see, price returned to a level that was an impulse 1 hour zone. By impulse, I mean it created a higher high when it was touched and the orders were accumulated. So just drawing that zone out here with our 1 hour chunk. Taking 1 hour longs is very possible whenever we're trading with the market. Just remember, continuation attempts are always more likely than taking a retracement attempt. So that's why I wasn't looking for a move up here to pull back here, because the size of the move that was created here is 34 pips. The size of the move that can be created here is 60 pips. So as you can see, I'm going to take the much safer move and the move that flows with the market. And after the trade, you can see how it played out. So jumping to lower time frames, of course, we waited until price hit the zone. On the 15-minute time frame, you can see we got instant rejection from the buys that were waiting in this area. So as soon as we got a touch of that zone, an alarm triggered for me on my phone, and that told me that EU was priming for a setup. So as we move forward in price action, we see that price retrace back to the zone, and we are retesting the range that was created here in the 1 hour impulse. The way I view ranges as buyers and sellers having a little battle, and the winner of the battle is going to dictate the direction of the market. We already know that the overall trend is bullish, so overall our bias is bullish, but if we did not get our confirmations, we never would have taken this trade. So keep that in mind. Just because our bias was that we're going to take longs, your confirmations keep you from entering that position. You do not want to trade emotionally. You want to wait until you have confirmations that tell you to enter. So my confirmation was the break and retest of this lower time frame range. The lower time frame range is formed when the lower low of the 1 minute time frame creates a push higher and a range is created. So as you can see, it started here, touched here, touched here, touched here. That shows consolidation. The idea is the consolidation will be broken, will trigger some stops, and the sell orders will flip to buy orders. And when we come back and retest, the sells that were here are going to close out their position, additional buys are going to take in, and we're going to get into the position with limited drawdown. That's the biggest thing. So when price gave me an engulfing off of that zone, as you can see here, we took the trade. So I took the trade as it formed this candle because we knew we were breaking through on lower time frames, lower than the 1 minute, and that's when we took our entry. So just to blow up my trade a little bit so you can see it. Okay, so this is the trade we took. On the 15-minute time frame, just going to go up so you can see my stops. My stops were just below the range, just a few pips to indicate any wick outs. The next area below the range would have been right here at this 15-minute order block. You're welcome to have wide stops, you guys, if you're willing to trade a 2-to-1 with a large. There's no issue with that. People tend to get these under 10 pip stops to try to be like these traders that are on the internet. They're posting their trades with those 10 pip stop because they're proud that they caught that. But that doesn't mean you have to trade like that. You're trading probability for a prettier RR whenever you have tighter stops. That's why my stop's loose. Realistically, I could have left it inside the range. My RR is 467 base, but if I roll it up inside the range, it could have been 8. I'm not going for that. I want the safe move that I don't have to overly monitor. That's very important to me because I have a busy life. I have kids. I got a job. We got to do all that. I cannot be sitting in front of this chart watching price play out. So my idea is to get into the trade, get risk-free, and move on. If you guys know how I trade, my risk-free is always a 1-to-1. So my stop loss was about 10.1. So we're looking for a 10.1 push before we take a risk-free partial. Risk-free partial is going to be half your trade. So if you're aiming to lose 1%, let's say you're trading with $1,000, you're aiming to lose 10 bucks. So if you're aiming to lose 10 bucks, you're aiming to gain 10 bucks at this point and close. When you make $10 here, you're going to close half your position. So you're going to make 5, and your stop then will be adequate to $5 loss, which creates the risk-free opportunity. If we move price forward, you can see that we got risk-free pretty quickly. We're running on a very bullish EU market. We're running into news also. We know that unemployment's coming up, and unemployment did help move this move, but it was moving prior to that because we're taking a continuation attempt from buys that were created down here. So as the trade played out, we moved all the way up to our zone, and we smashed it pretty quick. So the parameter of this trade was very, very short. So we got into the trade and we were out within 2 hours. And 2 hours is a pretty good amount of time, but 47 pips on EU in 2 hours is strong. We did have slight rejections at this level, but it didn't scare me out because we were already risk-free. Because we were risk-free, we changed this to gray, and that's the position that we took. On the 1 minute, the only thing I really worry about on these trades in the middle of the trade is 15-minute impulse levels that push us around. So the level I was worried about was, of course, the London level that was created. So we boxed out the London level just to give you guys a little tidbit of lesson. And take this as a lower time frame zone. If we go back to the 1 minute, you can watch these areas to ensure we don't get transition. And we don't get transition, price is probably going to continue. Now, when we came up to the zone, we did see a little bit of stalling. We were already risk-free at this area. So we weren't worried about the trade not working in our favor. We're going to let it run unless it comes all the way back down. If it stops us out, we watch for a potential re-entry opportunity to maybe take the same trade or a potential short to work our way down to the 4-hour zone below us. So when it came up to this zone, as you can see, it started consolidating. Do you see any floors broken? Do you see the lower highs broken? Not even on the 1 minute was price stalling. So whenever it comes to these levels that you guys think might turn price around, this being London's high, don't get scared out of your position. Hold it and wait for confirmation. So it ended up being this trade. I'm going to go ahead and show stats and make them a little bit bigger. It ended up being almost a 5-to-1. Definitely could have held longer if I killed the replay. Price continued up. It was a good target because it did create rejection. Another position could be taken on the reversal coming back down, but my money's to be made. I'm not going to worry about it. So if you guys learned anything from this, comment below or message me. On Instagram, I am Stony Financial. You can find 56 to 60, I think, examples of these trades, including this one. I'm going to break it down into text format. Maybe you can share with some friends who are struggling or share with some other traders who maybe trade like me. I'm very structure-based, and I'm very, I try to keep it very simple. So thanks, guys, again, and I hope you enjoyed the content.